What if I told you that with just $1,000, you could tap into three of the most explosive growth sectors in the market right now? Forget slow, boring returns. We're talking about stocks with the potential for massive upside. Companies rewriting the rules. Today, I've done the hard work for you. We'll break down three companies dominating cybersecurity, pharmaceuticals, and AI semiconductors. These aren't random picks. They're strategic plays in industries with unstoppable momentum. So, get ready to take notes. The information in this video could be the key to your next big investment win. Hit that like button, subscribe, and let's dive into the first stock. Our first pick is CrowdStrike, ticker CRWD, a leader in cybersecurity, an industry that's become absolutely essential in our increasingly digital world. As more of our lives, businesses, and even governments move online, the need to protect sensitive data and critical infrastructure has never been greater. Cybersecurity is no longer just a technical concern. It's a fundamental pillar of modern society, and CrowdStrike is at the forefront of this digital revolution. CrowdStrike's Falcon platform is a game changer. It leverages cutting-edge artificial intelligence and advanced behavioral analysis to detect and stop threats in real time, before they can do damage. Whether it's a laptop in a coffee shop, a server in a data center, or a cloud-based application, Falcon provides comprehensive protection across the entire digital ecosystem. This proactive approach is what sets CrowdStrike apart from traditional security solutions. Unlike old-school antivirus software that relies on outdated signatures and bulky downloads, Falcon is built from the ground up as a cloud-native platform. It's lightweight, fast, and infinitely scalable, making it ideal for organizations of all sizes, from small startups to global enterprises. In today's fast-paced, interconnected world, this flexibility is a huge advantage, allowing companies to adapt quickly to new threats and changing business needs. Cyber attacks are evolving at a rapid pace, becoming more sophisticated and harder to detect. Ransomware, phishing, and nation-state attacks are making headlines almost daily, and companies are investing heavily in robust defenses. CrowdStrike's subscription-based business model means customers pay recurring fees for ongoing protection, creating a steady, predictable stream of revenue. This not only benefits the company's financials, but also aligns their interests with those of their clients. Everyone wants to stay protected. Once a company adopts Falcon, it becomes deeply integrated into their operations. The platform is not just a piece of software. It's a critical part of their security infrastructure. This deep integration makes it difficult for customers to switch to competitors, resulting in exceptionally high retention rates. In the world of software, this kind of stickiness is incredibly valuable, as it leads to long-term, loyal customers and a strong foundation for future growth. CrowdStrike isn't standing still. The company is constantly innovating, expanding its suite of offerings and upselling customers on new modules. These include advanced features like identity protection, cloud security, endpoint detection, and even threat intelligence services. By continually adding value, CrowdStrike increases its share of wallet with existing customers and makes its platform even more indispensable. The global cybersecurity market is booming, projected to be worth hundreds of billions of dollars in the coming years. As digital transformation accelerates across every industry, the demand for effective security solutions is only going to grow. CrowdStrike is perfectly positioned to capture a significant share of this expanding market, thanks to its reputation, technology, and relentless focus on innovation. Financially, CrowdStrike is firing on all cylinders. The company is posting explosive revenue growth year after year, with positive free cash flow and a clear, credible path to sustained profitability. Investors love to see this combination of rapid top-line growth and improving margins, especially in a sector as critical as cybersecurity. It's true that CrowdStrike's valuation looks high by traditional metrics, but that's often the case with disruptive leaders in massive, fast-growing markets. When you factor in their sticky customer base, recurring revenue, and huge addressable market, today's price could look like a bargain in hindsight. Sometimes paying up for quality and growth is the smart move. The shift to remote work and the explosion of connected devices have created new vulnerabilities, while the rise of AI-driven cyber attacks makes the threat landscape even more complex. CrowdStrike's solutions are uniquely suited to address these challenges, providing security that adapts to wherever and however people work. What's more, CrowdStrike's AI-driven platform gets smarter with every new customer and every new threat it encounters. This creates a powerful network effect. The more data the system analyzes, the better it becomes at stopping attacks. Over time, This builds a deep competitive moat that's hard for rivals to cross. CrowdStrike's client list reads like a who's who of the business world. They protect Fortune 500 companies, major global banks, and even government agencies. This level of trust and credibility is hard to earn and even harder to replicate, further cementing their leadership in the industry. And the story doesn't stop at home. CrowdStrike is just beginning its international expansion, tapping into new markets across Europe, Asia, and beyond. As cyber threats become a truly global issue, the company's growth potential only increases. Every time a major cyber attack makes the news, it serves as a stark reminder of the importance of robust security, and it's essentially free advertising for CrowdStrike. These high-profile incidents drive demand for their solutions even higher, as organizations scramble to avoid becoming the next headline. At the helm is founder-CEO 𝗗𝗟𝗏, a true visionary in the cybersecurity space. Founder-led companies often outperform because of their passion, long-term vision, and deep understanding of the business. Kurtz's leadership is a major asset for CrowdStrike's continued success. Of course, no investment is without risk. The stock may be volatile, especially in the short term, but the underlying need for cybersecurity is only going to grow. For patient investors, this is a long-term play on a critical, ever-expanding industry. That's why CrowdStrike stands out as a cornerstone for any modern growth portfolio. It combines innovation, recurring revenue, and a massive market opportunity, all the ingredients for long-term success. For all these reasons, CrowdStrike, CRWD, is an excellent place to consider putting a portion of that $1,000 to work. It's a company with staying power, a clear mission, and the potential to deliver strong returns for years to come. Investing in CrowdStrike is more than just buying a stock. It's a bet on the future of security, the continued rise of the cloud, and the transformative power of artificial intelligence. Now, let's move on to our second company, one that's tackling a massive global challenge in healthcare and shaping the future of medicine. Our second stock pick is Eli Lilly, ticker LLY, a pharmaceutical powerhouse that has become synonymous with medical innovation and scientific progress. Founded over 145 years ago, Eli Lilly has a storied legacy of bringing life-changing medicines to market, and today, it stands at the forefront of a new era in healthcare. Their latest breakthrough drugs, Mounjaro and Zepbound, are transforming the landscape of diabetes and obesity treatment. These medications are not just incremental improvements. They represent a paradigm shift, offering hope to hundreds of millions of people worldwide who struggle with these chronic conditions. The global epidemic of obesity and diabetes has long been a challenge for healthcare systems, but with these new therapies, Eli Lilly is addressing a massive unmet need. These GLP-1 agonists are more than just effective. They're poised to become lifelong treatments for many patients, ensuring a steady, recurring revenue stream for the company. The science behind these drugs is cutting edge, targeting the body's metabolic pathways to deliver real, sustained results. For Eli Lilly, this means not only helping patients live healthier lives, but also building a business model with remarkable durability and scale. But the story doesn't end with weight loss and diabetes. Eli Lilly is aggressively researching the potential of these drugs in other major diseases, including cardiovascular disease, sleep apnea, kidney disease, and even Alzheimer's. Each of these areas represents a multi-billion-dollar opportunity, and early clinical data is promising. If successful, these drugs could redefine standards of care across multiple specialties, further expanding Lilly's impact and market reach. Beyond metabolic disease, Eli Lilly's research pipeline is exceptionally deep and diverse. The company is a leader in oncology, developing new cancer therapies that harness the power of the immune system. In immunology, Lilly is advancing treatments for autoimmune disorders, and in neuroscience, it's at the forefront of Alzheimer's research, a field with enormous human and financial stakes. This breadth of innovation positions Lilly as a true pharmaceutical pioneer. Demand for their new drugs is so overwhelming that Eli Lilly is investing billions to expand its manufacturing capacity. New factories are being built at a rapid pace, equipped with state-of-the-art technology to ensure quality and efficiency. Every new facility not only meets soaring demand but also unlocks billions in additional revenue potential, reinforcing the company's growth trajectory. Financially, Eli Lilly is in a league of its own. The company is posting explosive revenue growth, with profits and margins expanding quarter after quarter. Management is reinvesting this cash flow into research and development, fueling the next wave of medical breakthroughs. This virtuous cycle of innovation and reinvestment is what sets Lilly apart from many of its peers. The stock's valuation is undeniably high, reflecting investor confidence in Lilly's future. But when you look at the company's extraordinary growth, robust pipeline, and the scale of the opportunities ahead, it's clear that investors are paying for a fundamentally transformed business, one that's positioned for long-term leadership in global healthcare. The global healthcare market is vast and growing, and even with formidable competition from companies like Novo Nordisk, there's ample room for multiple winners. The demand for effective treatments is simply too great for any single company to dominate, and Lilly's early leadership gives it a significant edge. Much of this success can be attributed to Lilly's visionary management team. Years ago, they made bold bets on these new drug classes, investing heavily in research and clinical trials when the outcome was far from certain. Their foresight and disciplined execution have paid off, positioning the company as an industry leader. Demographic trends are also working in Lilly's favor. As populations age and rates of obesity continue to climb worldwide, the need for effective treatments will only intensify. This creates a powerful tailwind for the company, ensuring that demand for its therapies will keep growing for years to come. What makes Eli Lilly truly unique is its rare combination of blue-chip stability and tech-like growth. It's a company with a rock-solid foundation, yet it's delivering the kind of innovation and expansion you'd expect from a Silicon Valley startup. That's an incredibly rare and valuable mix for investors. For all these reasons, Eli Lilly, LLY, is our second pick. A company that's not just delivering financial returns, but also changing lives on a global scale. Adding it to your portfolio means investing in both growth and positive impact. This is a unique opportunity to participate in a company that's generating massive returns for shareholders while making a profound difference in global health outcomes. Few investments offer this blend of purpose and profit. The growth story for Eli Lilly is just getting started. With a robust pipeline, expanding manufacturing, and a world-class team, the company is poised for even greater achievements in the years ahead. Now let's get to our final stock, a company building the engine of the AI future. Our third and final stock is NVIDIA, ticker NVDA, the company powering the artificial intelligence revolution. Over the past decade, NVIDIA has transformed from a niche graphics card maker into the undisputed leader at the heart of the AI boom. Today, NVIDIA is not just a tech company, it's the engine driving the next era of computing. NVIDIA's GPUs, once beloved by gamers for their stunning graphics and performance, are now the backbone of AI and machine learning worldwide. These chips are the workhorses behind everything from advanced research to the latest generative AI models, powering breakthroughs in language, vision, and robotics. Their CUDA software ecosystem locks in developers and creates a massive competitive moat. CUDA isn't just a tool, it's a platform that has become the industry standard for AI development, making it incredibly difficult for competitors to catch up or lure away NVIDIA's loyal developer base. NVIDIA dominates the AI data center chip market with 90% plus share, selling the picks and shovels in the AI gold rush. Every major cloud provider and AI startup relies on NVIDIA's hardware to train and deploy their most advanced models, making NVIDIA indispensable to the entire industry. Demand for their chips is off the charts. Tech giants like Meta, Google, and Microsoft are buying as many as they can get. In fact, NVIDIA's order books are filled months in advance, and the company is racing to keep up with the insatiable appetite for AI compute power. Financially, NVIDIA is a juggernaut. Revenue and profits are exploding, with gross margins in the 70–80% range. This level of profitability is almost unheard of in the semiconductor industry, and it gives NVIDIA the resources to invest aggressively in research, development, and expansion. The AI build-out is just beginning. As more industries, from healthcare to finance to manufacturing, embrace AI, the demand for NVIDIA's products will only accelerate. We're still in the early innings of a multi-decade transformation. The next wave, AI inference, will be even bigger, and NVIDIA is already rolling out chips for this market. Inference is where AI models actually do their work in the real world, and NVIDIA's new products are set to dominate this crucial phase of the AI lifecycle. These inference chips are already being adopted in everything from medical diagnostics to autonomous vehicles and smart assistants, opening up vast new markets for NVIDIA beyond traditional data centers. Their relentless innovation cycle keeps them years ahead of competitors like AMD and Intel. NVIDIA's pace of product launches and technological breakthroughs is unmatched, ensuring they remain the gold standard for AI hardware. Beyond AI, NVIDIA leads in gaming, automotive, self-driving tech, and 3D simulation. Their chips power the world's most immersive games, enable the brains of autonomous vehicles, and drive digital twins that help companies simulate and optimize real-world systems. NVIDIA's technology is also at the forefront of scientific research and urban planning, helping solve some of humanity's biggest challenges, from climate change to infrastructure design. The valuation is high, but their earnings are growing even faster than the stock price. Investors are betting that NVIDIA's dominance in AI will translate into decades of growth, and so far, the company is delivering on that promise. The biggest risk is competition, but no one else has NVIDIA's full-stack ecosystem of hardware, software, and networking. This integrated approach creates powerful network effects and makes it nearly impossible for rivals to replicate NVIDIA's success. Founder CEO Jensen Huang is a visionary, driving the company's transformation and relentless execution. His leadership and long-term vision have positioned NVIDIA as the most important company in the AI era. Investing in NVIDIA is the most direct bet on the continuation of the AI revolution. As AI becomes embedded in every aspect of our lives, NVIDIA's influence will only grow. Demand from sovereign nations for AI infrastructure is a new, massive catalyst. Countries around the world are racing to build their own AI capabilities, and NVIDIA is at the center of this global arms race. From education to healthcare, NVIDIA's chips are enabling smarter classrooms, faster medical breakthroughs, and more efficient businesses, touching lives in ways we're only beginning to imagine. From gaming to global AI, NVIDIA's story is just beginning. The company's reach is expanding into every corner of the digital world, and its impact will be felt for generations. For these reasons, NVIDIA is our third and final pick. It stands at the intersection of technology, innovation, and explosive growth. It's a rare opportunity to invest in a company truly changing the world, and getting paid handsomely to do so. Few companies have ever combined this level of innovation, financial strength, and visionary leadership. This is the definition of a generational growth stock. NVIDIA is not just shaping the future of technology, it's shaping the future of our world. There you have it, 3 incredible growth stocks: CrowdStrike, Eli Lilly, and NVIDIA, each dominating a critical sector. These companies have powerful moats, massive markets, and clear paths to continued growth. Always do your own research, but if you're seeking high growth potential, these are a great place to start. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and real-time trade alerts, join the Stocks Galore Patreon community. Now tell me, which of these 3 stocks are you most bullish on for the next 5 years, and why? Drop your pick in the comments. Don't forget to like, subscribe, and share your thoughts below. Thanks for watching, and I'll see you in the next one.